Crypto markets are facing sharp contradictions right now. Billions of dollars in startup funding pouring in even as Bitcoin's price plunges, and a bizarre exchange error briefly crashed BTC prices. Today we break down what's happening, why it matters, and what traders and investors should watch next. Let's start with the big picture. Despite a dramatic downturn that has wiped out roughly $2 trillion in total crypto market value, institutional and venture investors are still investing heavily into blockchain startups. In the first week of February alone, around $258 million flowed into crypto companies, particularly those building infrastructure, compliance services, and institutional tools, led by a massive $100 million raise for Anchorage Digital. These investments signal that large players still see long-term value in crypto infrastructure even as prices weaken. This divergence, with fresh capital flowing in while prices slide, highlights a split in sentiment: long-term confidence in the technology itself versus short-term volatility in token prices. Meanwhile, Bitcoin itself has been under heavy selling pressure. After reaching record highs in 2025, BTC's price has now fallen more than 45% from those peaks, dipping below critical support levels like the $65,000 mark for the first time since late 2024. This sell-off hasn't just hurt traders, it's also dampened market psychology. Michael Burry, the investor known from The Big Short, warned that continued declines could trigger severe losses, not only for institutions holding Bitcoin, but also for broader risk assets if leveraged positions unwind. Some analysts note that the drop isn't purely technical. It's tied to broader macro forces like waning appetite for high volatility assets and a shift toward defensive investments outside crypto. But short-term panic isn't the whole story. Weak sentiment often leads to liquidations and deeper price declines, feeding the downward spiral. Adding to the chaos, a major operational error at South Korea's Bithumb exchange made global headlines this week. Reports suggest that during a promotional reward campaign, instead of distributing small cash bonuses, the exchange mistakenly credited users with 2,000 Bitcoin each, a glitch worth hundreds of millions of dollars. This error triggered a rush to sell, briefly pushing Bitcoin's price on Bithumb more than 10% below other exchanges before the issue was corrected. South Korean regulators have taken notice, saying the incident exposed vulnerabilities in exchange controls and could lead to inspections if irregularities are found, raising questions about risk management at even major platforms. While Bithumb says most of the mistakenly transferred Bitcoin was recovered and that customer funds are safe, the momentary volatility underscores the fragility of liquidity and confidence in crypto markets, where operational mishaps can quickly translate into price swings. So how do we reconcile fresh investment dollars with prices sliding and operational turmoil? On one side, venture capitalists and institutional investors are doubling down on core infrastructure and compliance-focused projects, betting that long-term adoption, especially among regulated institutions, will ultimately pay off. On the other hand, short-term price action is being driven by liquidations, risk-off sentiment, and technical pressures sometimes amplified by extraordinary events like the exchange Airdrop. This disconnect, capital flowing into the foundations of the ecosystem while token prices wobble, suggests a maturing market, less speculative hype, more strategic positioning. But it also means volatility can remain elevated. For traders and investors, here's what to keep in mind. 1. Short-term volatility can be aggressive. Prices can swing hard on technical and news catalysts. 2. Operational risks matter. Glitches like the Bithumb error can cause temporary but sharp dislocations. 3. Institutional focus on infrastructure could support long-term growth, even if price cycles remain turbulent. 4. Risk management remains critical. Use position sizing and stop losses, and don't bet more than you can afford to lose in a volatile market. Even in a market slide, smart money is still making bets on blockchain's future, but short-term price action can be brutal. If you want more daily crypto updates and unbiased breakdowns like this, hit that subscribe button and let us know in the comments what topic you want explained next.